Hello, everyone, and thank you for joining us today as we talk about the hidden costs of check fraud, uncovering the true impact on consumers. I'd like to introduce Jim Mortensen. He's joining me today as we talk about this topic. I'm Kerry Cantley, Vice President of Digital Banking Strategy for Mitek. And Jim is a strategic advisor with Datos Insights. He is also a very tenured and experienced leader and thought leader in the industry. He's had various product and risk management roles, specifically focused in fraud and AML. Also managed identity verification capabilities and product risk management, including credit underwriting solutions at top-tier financial institutions. So thanks for joining me today, Jim, as we go through this webinar. I'd like to talk a little bit about what we're going to cover, and then we'll really get into the heart of the matter. So during the session, we're really going to talk about how check fraud is evolving. I think everybody, if you are joining or participating in the industry, knows that check fraud is a significant issue in the industry. We'll talk about that a little bit. We'll talk about the importance of a customer-centric approach to not only fraud detection and resolution, but also prevention. And we'll also talk about strategies for reducing the impact of check fraud. We'll talk about ideas and how to engage the customer effectively and the implications if you're not engaging the customer through the process. So let's just start briefly with what's happening out there in the industry. The statistics are staggering. Fraud's estimated to be a $485 billion challenge in the industry. 80% of organizations are saying that they have been affected in some way, shape, or form by check fraud. A third of small businesses are actually saying they've been impacted by check fraud. And as we all know, over 60% of Americans, and I would say that covers small business and commercial clients, are still writing some form of checks. And then we know that about 30% actually or more of the losses at a financial institution are most likely check fraud these days. It's projected in 2024 that check fraud is going to be potentially a $24 billion loss across the industry. So pretty significant issue. The other thing that I would say is check fraud is connected to the rest of the fraud ecosystem. So you can't talk about fraud without talking about check fraud. You can't talk about check fraud without talking about the rest of the ecosystem and the implications of check fraud. It's really important to address this not only with consumer education, but also engage them in the process, and that's what we're here to talk about today. I'd like to start off with a little bit of a poll, just to understand how the institutions out there that have joined us today are feeling related to what they do when there's a fraudulent claim or claim from a customer around fraud, not a fraudulent claim. So do you give account holders provisional credit while they dispute their fraudulent check charges on their account or during that investigation? It's a yes, a no, or it depends kind of answer. And the reason we're asking this question is we're going to kind of deep dive into a study that was done by Datos Insights related to the customer experience and what consumers are feeling about the end-to-end process when there is check fraud on their account. So I'm going to turn it over to Jim. He's going to talk a little bit about how the study was done and completed, and engagement there around that study, and then we're going to dig into the details and the outcomes of that study and what it means for those that have joined us today. So Jim, welcome, thanks for joining me, and I'm going to turn it over to you to talk a little bit more about the study.
All right, thanks a lot, I appreciate it. I'm really happy to be here. This is a subject that is near and dear to my heart, because over the last few years, just some other stats along the line of what Kerry talked about, SARs related to check fraud have increased by, about 150%, while at the same time, overall check volume, in terms of those checks being written, has dropped by about 15%. So it remains a persistent threat in the financial landscape. And for that reason, we wanted to sort of reach out to consumers to understand a little bit more about their experience with check fraud, and how they feel about the process. I think, the survey that we did covers a number of different fraud processes as it relates to consumer interactions with those processes and the consumer's perception of them. So we cover authentication, we cover scams and things of that nature. But check fraud was one that we really wanted to dive into this year, given the issues in the industry. So the survey was fielded in Q2 of this year, so it's pretty fresh data. And we did this over a number of markets, although for the check fraud piece, we really focused on the US market. And it was the observations in terms of the number of consumers we surveyed were just a little bit over 1,000 in the US market. And what we found, as I said, kind of overall, I think the most interesting statistic that we've got was that, consumers are being impacted at a greater rate and are repeatedly impacted on closed accounts is what we're finding. A full 62% of consumers who we had surveyed, and who had dealt with a fraudulent item charged to their account, were surprised that the bank had not detected that item and allowed that item to essentially be charged against their account. So consumers are obviously a bit perplexed. I don't know that level of surprise was any different previous to the rise in check fraud, but what's clear is that the impact on consumers, just given that higher volume of check fraud, is what's new. The big impact on consumers in terms of having to deal with suspected check fraud either relate to those just having the item charged to their account, and then reducing their balances and having some impact from a returned item perspective, returned, valid items, and also losing their level of funds availability as a result of that item being charged against their account until they actually identify it. Our research revealed the majority of consumers are surprised, and when their accounts get charged for fraudulent items, or an item that they deposit is suspected as being fraudulent. Now, so we covered a couple of different areas. So to really understand what's going on with consumers. First was, as I mentioned, items that are fraudulent in being charged to their account, or at least suspected to be fraudulent, because there's really a couple of different impacts there. And then the second item was where consumers are making a deposit of an item that is ultimately suspected of being fraudulent.
Yeah, what's interesting is that repetition, right, Jim? Repeated. You're seeing that trend across all fraud, right? Lenses, payment fraud, identity fraud, as well as check fraud, is there's this repetition now that occurs. So it's not a one and done fraud event. It's a repetition of implications or impact, as well as items that are associated with that first fraud item.
Absolutely. Now you see here, so the results of the poll that we did. So does your institution offer account holders provisional credits? 34% yes, 17 no, and what I suspected is that close to 50% are it depends. And it depends upon probably the relationship with the client. It depends upon the nature of the item and things of that nature is my guess. But the key point here, I think, is that consumers are not always receiving a provisional credit, where for the most part, it's a different experience than they would have on a card-related account.
We all think it works like card, right? I mean, who knew there were different regulations and different experiences out there for payments, but the consumers, right, from their perspective, don't quite understand what you see on the screen here, I think is the point, right?
Absolutely.
Yeah.
I mean, it's interesting because one of the things I notice a lot when we are surveying consumers is we are really careful to be very explicit in how we describe things, because consumers, when those of us are in the fraud industry and the banking industry, we sort of take for granted our understanding of how things work or are supposed to work. So I think it's sometimes very interesting in terms of how consumers perceive those processes that we execute. So I wanted to cover, the first area is consumer perception of the resolution process. And really what I'm talking about here is this first question really deals with a situation where a deposited item is not being, it's suspected of fraud. So I'm a consumer, I'm going in, I'm depositing an item, it's suspected as being fraudulent. What is the process that follows, right? And so on. And we ask consumers, how would you rate the resolution process for those suspected fraudulent check items? And that includes everything from the communication to the consumer through to the actual ending resolution. And we asked them to tell us sort of what was their perspectives. They face significant challenges, as you might imagine, when checks are flagged for potential fraud, including delayed availability of funds, potential fees related to items that are subsequently presented in anticipation of those funds being made available. But in this response here, 47% of consumers found that the resolution process for suspected fraudulent items was either somewhat or very difficult. And I think there's a couple things that are driving this. First of all, they're a little bit perplexed as to what actually occurred in this process. They're also not fully understanding the steps to resolution of such an item, like who gets contacted, how does that process work. I think consumers are more aware of how those processes work when they dispute an item on, say, their credit card, because they know they're going to reach out to the merchant, they know kind of what happens. But when something like this happens, it's a bit different.
Do you think that, and as we go through this, Jim, do you think that those that got reached out to would be in that somewhat easy, very easy, versus if they had to reach out, right, to remediate that hold or that resolution process for suspected fraud, that leaned towards this somewhat to very difficult challenge that you see here?
Yeah, I think that's a fair inference on that, because certainly I think once consumers are made more aware of the process that's going to happen and are kept informed of what's going on in that process at important milestones, the more comfortable they feel with it, the more they understand it. They may not like where it's going in terms of whether or not they got provisional credit or how their funds availability worked out, but at least they know what's going on. And I think that's a big step, because remember, in this first example, this was not initiated by the consumer, right? This is a situation where the bank has flagged an item the consumer deposited as potentially fraudulent. Right. And when you think about the sort of check fraud process, there are a number of items that are truly good items that are flagged as a result of from false positive depending on what solutions.
Absolutely.
So it's not always the case. Another interesting finding was that about 50% of consumers reported not understanding why a specific item was flagged as potentially fraudulent when they made a deposit, which speaks to that larger issue of communication when consumers feel somewhat sort of surprised about the process and what happened.
And we may get into this, but there is a question there that I think aligns to this particular view, Jim, is what % of consumers in the survey understood their obligations highlighted in their bank deposit agreements? You may not have necessarily asked that question in the study, but did that, some of that, and we may dig into it in some of the other aspects of the data that we share today, but did you get a sense for the did they understand their bank agreement, some of that criteria for why what you have up in front of us in terms of the resolution process when there's suspected fraud came into play? It
was not a specific question that we asked them. I think it's a good question. It's something we could add in future years as we go forward. But when I think about, and I agree. I mean, we all know kind of how those agreements are written, what their intent is, and what those rights, are and obligations are under them. However, when I think of a lot of consumers, very few of them, I would assert, really have a good understanding. Really, how many of them actually read that? Not an excuse. Everybody's responsible for the obligations they enter into. But I think there's a level when you think about it from how consumers approach these types of products. My sense is that there's not a good understanding there.
Yeah, makes sense.
Yeah. So like I said before, I don't believe this reaction here to the actual dispute process is anything new. I think that the key thing that's different here is the volume associated with it, and how often consumers are having to deal with this in the current environment that we're operating in. When their accounts go negative, that creates another issue for the consumer, resulting in those return payments, unexpected fees, and potential issues with deposits, or I should say items that are being presented.
Yeah, it's not just the one item that gets held, right? It's everything else that may be coming behind it. That's at risk or an issue. Yeah.
It's that domino effect.
Exactly.
Right. I would say while improved detection and prevention is important, I know that everybody in the industry is striving to get better at reducing the level of false positives related to items that are flagged. Communication is key to improving this overall customer experience. I keep on going back to this sort of example of a card dispute. While we all know it's a bit of a different situation, the consumers are a little bit different in terms of where they're coming from, in terms of their expectations. At minimum, letting them know how long to expect until resolution, letting them know who's involved in the process, right? In terms of how it's going to occur. And, that amount is removed from their account during the dispute process is important for them to understand. So they're not surprised.
That's right.
This clarity is needed not just when deposit items are suspected, but also when you get to items that are charged to the consumer's account that are suspected of being fraudulent. And so that's the other area that we covered in the survey. So we asked consumers, how would you rate the dispute process for a fraudulent item that was charged to your account? And, not surprisingly, similar to on the deposit side, 45% of consumers found the dispute process for, items charged to their account 45% found either very or somewhat difficult. And a lot of this, results in the fraudulent check and being charged against their account. And until they actually find out about that, it could lead to other fees, obviously other checks bouncing that were not intended to bounce, or were not intended, or were intended to be cleared by the consumer. So it becomes a very challenging process, as we said before.
Yeah, I mean, we call it claims process, right? In our world of, banking terminology. And the claims process is very, very difficult. The person you start with may not be the person that does the research, right? You call in, I don't know how to file a claim or a dispute. I don't know what to do next. It's why isn't it just yes, it's fraud, like in credit card lands, like we keep mentioning, right? But it seems so easy. Now, that's the consumer side. It's very difficult for the banks to close out that claims process for a card. However, the front end experience that the consumer feels, as you see here, in the regard to check or the traditional payment method of check, and in that deposit world, is seems to continue to be a little bit difficult for them to maneuver through.
Right. And I think, trying to understand a little bit more about, or providing the consumer more information, I keep on coming back to that because that eliminates the surprise or the satisfaction level associated with this process, or improves that satisfaction level. If they're, I think the other key aspect on this side is if you're not going to issue a provisional credit. So go back to that first survey question where I think it was 45% said it depends. The consumer wants to know one way or the other, and if it's not going to be issued, they want to know why. So being very clear in that communication, I think, is really important.
And timing, right? How long is the dispute process or that claims process going to take? Being very upfront about the time that's going to take to do the research or how that process works. Again, for those that may have not experienced check fraud, where they've had other types of payment fraud, there is a difference. We need to be explaining that, right? That time that it's going to take. If you're not, even if you are issuing provisional credit, the bank still has a time to research that and reverse that, so that, the whole idea of anxiety, and you're going to talk a little bit about that stress level that comes up, but just some of those information on what is the process, how is the process going to work, and at the end of the day, what are the results going to be, and how will I be communicated, right? It's that, standard process that we all want to think about when we have our own challenges, regardless of what that is, whether that's some other credit with a merchant or another type of fraud. Those are the things I always wonder. Our consumers are asking that in the banking land too, right? In the banking world.
Right. Yeah, I do think that timing to resolution is really important for the consumer. I think also the more we can make this dispute process like what we experience on debit or credit card, it'll be easier for the consumer to understand. Now, I know there's obviously some limitations, but the more like that we can do, the better off we would be, I believe. So, and I think we shouldn't discount the sort of emotional and psychological impact of a consumer, that a consumer feels, and the stress levels that they feel when their account balance is substantially lower than they thought it was because of something like this, or their available balance, I should say. And so that, again, it's psychological, it's emotional, and it in the consumer's mind, it starts to erode some trust in the financial institution that they're doing business with. So I think that's a really positive, coming at this with better communication is a really positive way to lessen that impact on the consumer.
That's right.
So we have another polling question. And this is, I think, a really interesting one. It says, do you involve the account holder in the resolution process proactively by sending a text or other fraudulent message, to validate a suspected fraudulent item? So think of the situation where the consumer, we're suspecting an item that's being hit against the consumer's account to be fraudulent, to actually engage them in the process is the question here. So do you do that, or you do not do that at your institution?
Yeah, what's interesting, right? Again, you were talking about balancing the experience. I do certainly get a text if there's something that my credit card company says, hey, we see something that's suspicious. Are you really in California, right? Purchasing gas at XYZ gas station, or, they're, in those kind of ways. I have alerts that I may be able to set up through my online banking based on dollar amounts, right? And I get an alert as something large, a dollar amount hits my account. Similar, right, into this payment method that we're thinking about, how are we leveraging those same capabilities when it comes to check? Because the prolific impact that check fraud is having, right? If check fraud was like it was previous to the pandemic, right? And we were seeing check fraud decline, or at least stay flat as check decline was happening, then maybe we would, maybe some of those just standard alerting messaging may have been okay as check volume continued to decline, but we're seeing the opposite happen. So how are we, as institutions, how are institutions handling this communication with the customer?
Absolutely. Yep. So on to the next. One of the other areas we were really interested in too is, okay, so what? We have the dispute process, we have the resolution process related to deposited items. The question we wanted to understand from a consumer's perspective is a little bit more basic. How likely would you be to leave your bank or your financial institution if unauthorized or fraudulent transactions occurred on your checking account? Now, one of the things that we did with this question is we asked this question about different types of accounts, both credit card accounts, also debit card transactions, and checking account transactions. So we separated on the debit card side between a truly debit transaction versus other transactions on a checking account, largely related to the checks and ACH items. And so it was interesting. We found that 61% of consumers said they would be likely or somewhat likely to leave their financial institution if an unauthorized or fraudulent charge occurred on their checking account. And in this willingness to attrite was notably higher than credit card and debit card transactions, indicating a greater, in my view, a greater sensitivity to fraud and fraudulent charges on checking accounts, kind of given the overall nature of the checking account. Mm-hmm. And I think to some extent, the lack often of provisional credits.
Yeah, I mean, that makes sense, right? I use my checking account for my everyday potential livelihood, right? Of the deposits going in, my ability to go to a grocery store, all of those things coming in and out of my account, my ability to pay my bills out of it, all of those things. So it's very sensitive. It's also a commoditized product. Like everybody sells a checking account, right? Not all, whether you're a credit union or institution, you have a base, right? Relational checking account. So in that regard, it's pretty easy for me to, I say easy, right? Potentially wind that down and move it to another institution. And if I have a concern with my brand because I've had this impact on my checking account and you're not giving me credit, and now I'm having difficulty with that dispute process, and I don't understand the communications, or I'm not getting any communication, it just the ands start winding up, and I'll be like, yeah, I probably could make this change pretty easily because I don't trust you anymore.
Right. And I think, when you look at it, from a financial perspective, as a banker, and you start thinking about this relationship that you have with the consumer, you lose a lot more than just the DDA revenue, right? Mm-hmm. Because DDA tends to be sort of that anchor to the relationship, a consumer has with a financial institution. But to your point, it's largely viewed as a commodity. The fuller relationship, though, involves credit cards, right, mortgages, other lending facilities that drive a lot more profit, generally speaking, than the deposit account. So when you start looking at this, the cost can be quite substantial, far and away beyond the actual DDA itself.
Absolutely. That's right. It's a move over time, right? It's an impact loss over time to the rest of the share of wallet versus just, I only have to worry about the checking account if you have a larger relationship with me. Yep.
Yeah, absolutely. All right. So let's look at the poll results from that last question. Do you involve the account holder in the resolution process? And, about 2/3 of the respondents that they did, which is great to hear. I didn't know how prolific this was or how common this was, but it's really good to see that more and more. I think it would be great to expand it even further, to the other third, to get more awareness to consumers and actually make them feel somewhat involved.
Yeah, that's actually higher than I was expecting. I was expecting around 50-50 or a little less. I think most fraud organizations, right, when they believe it's suspected fraud, but they don't want to hold the customer's deposit, may make a phone call, right? Another method, but that is a very manual. You've got to get a hold of the customer. You only have so many resources, so you're prioritizing that. You know, another drill down that we can even continue this conversation after in the industry is, are you, right, we say text or other messages, is it where the customer wants to be communicated to, right? So is it a phone call or is it a text message, and all of those methods of communication, and do you know your customer experience enough and how to get to them and the way that they want to be communicated to, because that's going to be the thing that you get the response through if they're more comfortable with that, right? So if my husband's more comfortable with a phone call, probably should call him. If, like me, I'm more digital, I want a text message because I have a very busy, world from 9 to 5, and I would probably respond more effectively to a text message. So those customer preferences really come into play here in terms of how to get the response you're looking for from the customer to validate if it's fraud or not. And the other nice, good, positive thing about this is if you are getting that message back, which is great, this percentage is, like I said, higher, right? You've engage the customer enough to protect the bank a little bit while you want to be there for your customers and your consumers and get that experience right. If they say yes, or if they say no, that gives you a little bit, right, of comfort into making that decision versus not engaging them in the first place, right? That liability risk issue.
Yeah, and I think the other big benefit of this is just the operational costs associated with it, right? It's much cheaper to do an automated message and response, right? Versus that phone call or some other message waiting for the consumer to respond. So yeah, good point. All right. Another area that we delved into as part of this research was to understand the consumer's perception of the reimbursement process for fraudulent items that were charged for their account. So both with respect to the outcome and the related timeliness of the response. So in this case, a plurality of respondents, 45%, indicated that they were credited for the item and it was relatively quick, right? So I kind of view that as a pretty positive response. It was a quick resolution, and they were properly credited. A third of the consumers said that the resolution took too long. Now, they too were credited, but they felt like the process took too long, which you can infer there's challenges with availability of funds that they were dealing with and things of that nature in the case of non-provisional credit. Interestingly, 21% indicated that they weren't reimbursed. Now, you would think that if it were a real fraudulent item, it would be reimbursed. So this may be a misperception, or a mistake on the consumer's part, or some combination thereof. But it doesn't lessen the consumer's frustration in this process and their perception of the process. So I think back to that communication piece, very clear communication is, I think, an important thing to make sure the consumer understands when the resolution does not go their way, why it doesn't, and what that really means to them. In any case, I would say there's an opportunity to improve satisfaction in this area as well through this, speed of resolution.
And I know everybody's trying to do a really great job about communicating around scams, right? But perpetrating fraud because you think you're, making money on the other side of that, you're right. If you are truly, in the midst of that fraudulent activity, you may not get reimbursed, right? And you may actually end up owing your financial institution, dependent on the scam. And so that's where that consumer education, like you said, right, there's probably quite a bit under that 20%. And everybody's out there really, hitting scam protection and awareness and making sure that you're making right decisions. I think the implications of some of that in terms of reimbursement, don't assume that your bank's going to be able to help you recover all of those funds. Stop, ask, reconsider before you move forward, because this is probably showing up a little bit potentially in this, not that it's necessarily showing up, but another angle about the reimbursement, education, and the participation of consumers in this environment that we're all in, right? If it's too good to be true, it probably is. But those are things that may be showing up here potentially as well that need to be considered through consumer education.
Yeah, absolutely. I think that this one really kind of speaks to that sort of time frame issue that we talked about, and letting them know what to expect. I think as I view the results of the survey, the key message that came out to me was certainly, first and foremost, reducing the volume through better solutions that can reduce false positive rates and kind of focus on the true frauds is obviously key. But also related to that is that this more sort of customer-centric policy and processes that bring them into the process, and have them help you resolve the situation, and also tailor your funds availability a little bit more around the established consumers. Make sure that you're truly treating those best customers the best way that you possibly can through provisional credits or other methods. But I think that communication goes broadly across all the consumers in your portfolio. So, Kerry, on to you for the next slide.
Yeah, certainly. So we talked a little bit about this as we were discussing kind of the implications here for consumers. They are 60% likely to leave an institution if that transaction has occurred on their checking account. That's a broader industry statistic. But it comes down to brand and trust. And I think you made a really good point in terms of consumer experience, customer experience in general. The consumers these days expect you to know who they are. What that means to your specific bank or institution or credit union is up to you to decide, right? However, in days of everybody is equal, right? And I don't know enough, so everybody gets kind of the penalty box of holds and all of that. Your consumers are asking for more, and they're saying, if you don't know me enough to know what's fraud and not fraud, and I have this implication and you don't recover, right? Sometimes I say having a problem and having great recovery actually makes me more committed to you as my bank. But this is real. This is a brand and trust situation. So kind of let's talk about the approach, because we talked about what are consumers saying, some of the information statistics in the study. And not one of these, I'll say, is more important than the other, right? And this isn't a process step, like you must engage the customer and then utilize, check security features and AI and improve operational efficiencies. I think they all come together. It's some element of making sure that, number one, you have customer-centric capabilities. And if you look at your process, how are you making sure that that's front and center while you manage through the regulation and compliance activities that you have to do, but also utilize technology, especially around check, to take a look at that check. Image capabilities are out there. There's security features on the checks. There's information on that check. And if you know your customer from a profiling perspective, both on their transactions as well as the way that they write their checks and who they're writing to and the behaviors around that, then you employ those other additional learnings on top of that, and business rule capabilities and machine learning. It helps your operational efficiencies. If you're leveraging not the me problem, but the we problem, and engaging consortiums across this end-to-end kind of roadmap of detection, you'll be in a better position. I would say you will be, not maybe, because I think all of these things combined drive a better customer experience and reduce your fraud losses along the way, but improve your operational efficiencies, give your employees the right tools to engage with that customer appropriately as needed. and to become more efficient at what you're doing because you're using, advanced technology and employing machine learning to give them that, I say, go wide and deep at the right rate to detect this and move from today's detection to prevention. And that's kind of our overall goal, right? When you think about protecting your customer experience, is don't ever, right, protect them as much as you can from it actually becoming an issue in the first place. Right. And so there's things that you can do there if you're multi-layer in this multi-layer approach. And I think you said it right, in a customer-centric approach as well. Think about how the customer is going to behave and act through this engagement around check fraud. Yeah. So let's do another poll. Go ahead.
Well, I was going to say, one other thing I was going to say on that too is that one of the things around improving the operational efficiencies, it does a couple things, right? It makes your process much better and lower cost, but it also, improves satisfaction level of your analysts too. There are solutions out there that allow you to do a lot of great things with respect to, looking at overlay of prior items and presenting all the information to let an analyst really know what drove the risk assessment on a given suspected fraudulent item. So I think that's another aspect that I would sort of echo. So
yeah, so we'll pop this poll, and then I think there's a couple questions that I want to maybe pick up in the Q&A as well, Jim. How satisfied are you with your institution's current check fraud detection and resolution process? Oh, there we go. If you could kind of answer this poll, and we'll talk about the results of that in a minute. Are you very satisfied, moderately satisfied, dissatisfied, or very dissatisfied? I think everybody has different layers of detection. But remember, if you tie the two together, right, like we were talking about, how does that change this question, right? When you think about engaging the customer, creating those operational efficiencies, detecting fraud before it impacts your customer, are you happy with where you are today, or do you think there's room to go and move forward to improve that? Whether that's a reach out, the way that you talk to the customer, improvement of your claims process, or even your detection capabilities from an operational point of view. There's a question in here that's actually interesting. It comes up quite often around this perception that the majority of consumers have transitioned to electronic payments and platforms like PayPal, Venmo, and then what percentage of consumers still use checks, and what are their major categories of spend? I have my point of view on this. I don't know, Jim, I'll let you maybe answer, and then I'll give my perception on this as well from my industry experience.
Yeah, I think it's the old saying I've heard many people say is that checks will only stop or die off.
The last check.
Right. And the last check. There's two. There's the other one. The last check will probably be fraudulent, right?
Yeah.
I think we did ask a question in our survey about uses of checks. And we asked it was a couple of different responses we allowed consumers to come back with it. Yes, one was they would not miss checks at all, right? There was no concern about that. Second one was, I'd probably miss checks, but I could pay by other means. And then there was this last group that said, absolutely not. I need to have check, payment as a mechanism to satisfy certain bills. And so that, my recollection is correct. There was about, I want to say 16 to 20% in that last group that said that they absolutely need checks. So it's still a substantial portion of the population that says that. And then that middle group who says they would prefer the checks be around, but they could make do otherwise, I want to say it was about 30%. So then you got about 50% of the people that really would rather have checks as a payment mechanism, which means they're actually using checks today at a minimum. So I think while this comes down, and I further looked into that data by sort of, demographic, and not surprisingly, the younger individuals, some of which probably have never written a check, no problem. But the older individuals and older millennials and baby boomers were really more in the category of, I really would rather have a check available generally, obviously.
Yeah. And then you've got the challenge of small business and commercial, right? Invoicing, specific payments to, you were asking what types of checks as well, right? Specific payments to government agencies. I don't know about you, but my tax IRS check goes in at the day it's due, and I'm certainly not, excited about electronically passing those payments on. But those type of methods of payment are out there, and it will probably be one of the last that people are like, yep, electronic, right? I'm going to go electronic with that payment, or, you have to go in for certain types of payments with a check, depending on if they even accept electronic versions of payments. Or now if they're charging for a credit card, which I've seen that trend up, right? If I go in to pay my bill and it's electronic and there's a 2 or 3% charge, but they don't charge me to mail a check, you're almost having that reverse effect because of some of these charges that are happening. And most of those are around your, government and other agency type payments. You were asking like, what's the source? I think commercial and small business still lives on, right, being able to disperse checks. And so, what's probably the split, like 60% of people still write checks. Out of that, in terms of volume, we'll wait to see what the Federal Reserve study says, but I'm guessing it's, probably in that 70 to 30, 70% commercial small business, 30% consumer, or somewhere around that, maybe 60-40. But you're seeing that transition. Yes, consumers are not writing checks anymore. There's also this other trend at like house closings. You must bring an official check. They won't take a wire anymore because of all the wire fraud. So all of the payment methods and the fraud associated with them are starting to like overlap and compete with each other in terms of pushing to an alternative method. And so I think that challenge is out there. While yes, you're seeing that generational, I don't know how to write a check. However, if they have to have a check to make a payment, what they're doing is they're going into their branch and getting an official check because they don't have a checkbook. So I'm seeing some of those trends as well, but I agree with you, right? It's the type of people that need the checks from a business perspective, or usage to pay payment is really the ones that are continuing to exist.
One thing I want to clarify, there's a question about, the percentages I just mentioned about check usage, and it was 16 to 20% of people said that they would very much miss checks. There were about 30% who said they would prefer to have checks available, but they would be able to find another payment mechanism. So, yeah, exactly. And I think that gets roughly back to that 60% number that you're talking about of people who actually write checks.
Mm-hmm. Yep. Yeah. Couple takeaways, and then we're going to look at this last poll, and then we're going to open it up for a few more Q&A. I think we've been hitting quite a few of the Q&A questions that are out there, so keep asking them, and we'll continue to see if we can get through some more. Number one, understand your impact of check fraud on your consumers. Consider your customer experience. The resolution process is just as important as protecting and preventing the fraud in the first place, right? The experience needs to be prevention first, but if it happens, your consumers need more from you, as we've heard in this survey. Leverage technologies where you can, whether it be your prevention capabilities around check fraud detection, transaction. When we say behavioral analysis, it's transactional analysis, right? So if I see that the typical check that Jim writes is $1,000 and all of a sudden there's a $10,000 one, I may want to look at that, right? So understanding that analysis is really important. Enhanced alerts are always better when you think about the efficiencies for an analyst. Give them the information they need to know to make a quick decision or engage the customer. If you don't have that automated messaging in, which really excites me that to see that percentage of folks that are doing that. Collaboration is really important. So not only best practices, but we see it, right? Whatever the weakest link is in the neighborhood is where those fraudsters are going to hit next. So it may not be my bank today, but tomorrow it may be yours, or it may be my bank today and tomorrow yours. So collaboration at the local level as well as the institutional level is really important. And then just ensuring that you take that customer-centric approach to check fraud and resolution, like we see in a lot of the different other payment channels that are kind of emerging, like whether that's, you know, the faster payment, real-time payment, P2P environment, or even card, and see what are those best practices while the regulatory environment is very different, right? What are the best practices that you can take from those other payment methods or emerging payment methods that you can then apply to the experience your consumers or customers are feeling in this prolific check fraud challenge that we have? So I'm going to pop up a poll. Almost 20% say they're very satisfied. Big number in the moderately. So I think that means, hey, we're doing okay, but I'd like to see us do better. Whether that's on the customer engagement side or the operational efficiencies or leveraging technology better, 20% not very satisfied, very dissatisfied, with a little less than 5% in the very dissatisfied. So anything surprising that you would say from this poll is kind of resonate with you in terms of what you're hearing out there, Jim?
That's actually pretty much kind of what I expected. I think, you know, one of the other takeaway I would say that we didn't have on the list, but you know, I think, you know, there's a lot of you know, since this sort of resurgence of check fraud, there's been a lot of attention paid to it by, you know, various solution providers and certainly financial institutions. And I think staying abreast of the latest technologies associated with this, and to Kerry's point, understanding like where I can apply some learnings I have on other payment methods that make sense here is really important to, you know, to look at different, you know, methods, different types of, even down to check fraud, check stock changes that have been starting to evolve as well. So I'd say, you know, that's something that's really important in this area because it's gotten a lot of attention over the last couple of years.
Yeah, I would agree, right? The expectations from consumers, I'm sure regulators are asking that question. Check fraud, because of the spike that we've seen in the last several years, is getting more and more attention. So arming yourself with the ability to answer all of those layers of questions around how is the customer engaged? What's my customer experience? How do I handle that from an operational perspective? How do I improve my technology? How do I go deep and wide, but make my experiences at the customer level similar? They don't necessarily have to be equal, but similar, in order to, you know, it's going to help protect you along the way, and you'll be able to answer some of those questions. I popped this slide up here just kind of as a recap reminder of some of the things that we talked about, you know, around how you layer in this approach. I was looking to see if there's any other questions that maybe we might want to answer in terms of, I saw one around pay positive pay. Positive pay and pay positive pay solutions for your commercial customers is a fantastic way to engage them in detection. What I will say is communication with them, it certainly does make it easier. One of the things we are seeing though, especially with stolen mail, is commercial customers even though they've signed up for those type of products and services, because the stolen item equals the stolen item that's being deposited, whether that's through another synthetic business or some other type of method, they're not altering it enough that it's being caught by pay positive pay solutions, and then your commercial customers are impacted, which makes it a challenge for you to have that strong relationship. So even these kind of things around multi-layered approach apply to your commercial products and solutions as well, because we just said those are the majority of your check writers most likely. So spend some time thinking about your commercial customers as well and their experience in this. Yes, they own the liability. Yes, they're going to take the loss. However, maybe you're not giving them enough information, or you're not texting them about those potential risks. While a lot of the polling and the questions that even the white paper is focused on the consumer impact, but they go through the same process, right? It's very, most likely you're going to see some similar challenges. So I wanted to answer some of that. Any other questions that you see here, Jim, that you would highlight before we close out the webinar?
Let me see. I would just, one thing I did want to echo on the positive pay thing. While it's a great tool, it doesn't really address the situations where the payee name has been changed. So that's got to be another area that you look at in terms of being able to extract the payee name and some positive pay solutions. Here, and I'd like your take on this as well, Kerry. What are some of the most innovative technologies or approaches for enhancing check fraud detection and prevention? And I'll kind of start off. I think one of the things that I've been seeing lately is the sort of the confluence of multiple signals. Since checks are an analog instrument, okay, it makes it very difficult to detect an item. So you really need a number of different capabilities. You need to be able to look at pattern analysis, in terms of the transactional anomaly detection capability for the actual account holder. You need to also look at image analysis and forensics associated with the items. Very key.
Yeah, I agree.
Go ahead.
You got to have it all, right? I mean, you can't just be looking at one factor. I talk about three-dimensional. I think this is another case where it's definitely a three-dimensional challenge and opportunity, and applying the right science is absolutely a big part of that. Jim, this has been fantastic. The data and the results in the paper are very fascinating. The insights, from my perspective, give you a little bit more to, have those conversations with your client and customer experience teams around, this isn't just a fraud loss problem. This is a customer experience problem. This is a technology advancement problem or challenge, or even I would turn it into an opportunity, right? Around getting brand and trust and keeping those customers happy with the engagement that you give them. So thank you so much. Thanks for Datos for helping us, not only put on this webinar, but to do the research for us. Those that have participated with us today, you will get the recording, and then you will also receive the paper as well as a follow-up to the webinar. And we certainly appreciate the time. We'll take a look at those questions. If there's anything specific that you would like Jim or myself to answer, please reach out. You can reach us, I'm sure, via LinkedIn or email or through through the webinar sources. But again, Jim, I just appreciate your expertise and your time as we've participated together in this webinar.
My pleasure. Thank you very much.
Okay. Thanks, everybody, for joining us.